Headline earnings per share up 35%, earnings up 43%, and an interim dividend was declared, which was 35% better than the previous comparable period. As I say, Patrice Rassou on the telephone now. Patrice, at first glance, what do you make of these numbers?
These are very good numbers. Strong growth, as you would expect with a company where the loan growth has been growing at close to 70% per annum, and they're getting excellent traction. And you can see that from the customer numbers, where they now have over 4 million clients, which is pretty amazing. It's a very big number, and it just shows that they're doing the right things in the business.
Quite right, 4.2 million. I had to look at that a second time because I can remember Capitec 5 or 6 years ago when its share price wasn't quite as glamorous as it is now. And, you know, there was, I don't know how many clients it was then, but it just seems to have gone exponential. Now, the trick, of course, is how to, I mean, they've probably got the best of the underbanked or previously unbanked. I think there is an enormous amount of competition now, and they've done their best there. But I just want to sort of jump the gun a bit and go to their prospect statement. It says opportunities exist to broaden our market to include higher income clients. In other words, people that maybe with the big four at the moment, Patrice, are being lured into a simpler banking system.
Yeah, I think you're touching on something which is very interesting. It seems that if you go by what the regulator has been talking about in terms of treating your customer fairly, in terms of further noises on the type of bank charges we've seen around, it seems that the regulatory environment increasingly is going to favor a model of simple banking, a model of transparent pricing, and a model where you're not going to levy massive penalty charges on the client base. And that's where Capitec seems to have an advantage because, you know, by and large, and I know there's many different ways of measuring these things, but they're one of the cheapest transactional banking offerings out there in South Africa.
Yeah, I was talking to somebody who happens to own 4 restaurants in South Africa, a celebrity chef, if you like, and he was with one of the big 4. It was around about 9 months ago. He said to me, someone from Capitec drove into Stellenbosch, sat down with him, and then within 2 hours, everything had been changed from one of the big 4 to Capitec. He said it was just so simple. So maybe that's a trend that will be embellished. What about the other players in the market? They must be thinking along the same lines. What is Capitec's market share like, given the results you've just seen?
Yeah, it's always quite tricky to compare because, I mean, numbers are quite hard to come by. But I think one way to benchmark them, if you look at Nedbank Retail, which is sort of the big 4, the one which is just above them, Nedbank's got approximately, I think, 5.6 million clients, and we've just mentioned they've got 4.2. So they, as you said, from a starting base of 0, they're now within touching distance of Nedbank, and that's pretty amazing. And that's why, I mean, they're growing their branches massively. They're growing the ATM network massively, and they're making massive strides. I mean, it's pretty amazing.
Yeah, it is. Going back to the numbers now, return on equity plus 28%. And the other thing, apart from the startling 4.2 million active customers, is the rights issue. Were you expecting this?
No, we were not expecting this. Obviously, they haven't studied it in great detail. They talk about increasing their branches by 50 to 75 new branches over the next 3 years. I mean, that will absorb some of the capital, but I don't think nearly as much as 2.2 billion rands that they're talking about. That's quite substantial. That's 14% of their current shares in issue that they're going to absorb. Obviously, they're not seeing the growth rate that they've experiencing taper down going forward. I mean, it's a clear indication that they're seeing further growth avenues within their target markets, which is quite interesting. Maybe different from what we've heard from African Bank.
It's very interesting, actually, the market reaction. You think of rights issue, you think, hello, something's wrong. They need to fund something. They need to bolster their balance sheet, whatever the negative connotations are of a rights issue. But this one, if you read between the lines, they're actually taking the bull by the horns here, taking advantage of a relatively buoyant JSE and saying, we have a rights issue because we want to get more branches and increase our lending to a different sector of the market. So actually rather positive, I would have thought.
Yeah, it is. I mean, they well capitalized. The capital adequacy ratio is at 38%. Yes, the the sort of the benchmark that they have to beat is higher than the rest. Is probably around the 25% mark, like African Bank, but that gets very quickly eaten up when you grow at the growth rate that they are growing at. And yeah, I think, as you say, very positive from the point of view of it's a typical growth stock. It needs to be funded. Market is a bit cautious, as you say, in terms of maybe the reasons for why they need the rights issue. But you know, the proof will be in the pudding. I mean, the other thing is the market's been nervous with all the strikes that we've seen around and the potential fallout that we might see on the book. So far, there's been nothing in these current set of results. Arrears to advances are quite well behaved. So I think the market might be taking a bit of a cautious view of the next 6 months to see whether there's been any fallout from lending in areas where people have been going on strike.
One word answer, please. Buy, sell or hold from your point of view at SIM?
It's a difficult one. We value investors. We like the business model, but share price a bit pricey. Maybe below 200 Rand starts where it is now, starting to look interesting in terms of a nibble.